All right. Good morning. Welcome back here to Trader Minute. Great to have you aboard. Very interesting overnight action in S&P futures. You can see, the market closed near the lows yesterday. And then, futures start rallying again during the Asian session. We've been seeing this this week. It's kind of been the norm. And, continued on higher as Europe opened. And then we had this really sharp drop, big volume, sharp drop. And you can see the markets climb back and recovered that. So, a range here overnight from, 29.34 to basically 29.14. So about a 20-point overnight range, which is a little larger than what we've been seeing. And, definitely one that when we see a higher range overnight, it tends to suggest there's going to be a little bit more movement in the market the next day. But as I kind of noted this morning, I still expect, chop and churn. Chop and churn in the market overall. Different stocks are going to do some different things. But, as we go into the end of the month, as we go into, all eyes on the trade talks between Trump and the Chinese premier, as we're dealing now with politics to a greater degree in the U.S. and in Great Britain. There's a lot of just different moving parts that are out there in this market, and that's nothing new. That's the way the market's been. That's the way it's going to be. If you're looking for everything to settle down and for everything to be known and for the market to just make up its mind and do something, you're going to miss out on the next 5 years of trading, because it will continue to be that way. That's the way the markets always are. And it's finding the opportunity within those markets that is what a trader goes and does. Now, for the challenge, we have a trigger on the board right now, and a couple that could trigger by the close here. Let me log in. I'll show you. The trigger this morning is American Airlines. I talked about this one yesterday as a potential if it has a 3-7 crossover on it, just where the consolidation reading was. And we can see this morning the 3 is crossing up above the 7 here on this nice little move up. This is one of those where, this time element for the challenge of having to make trades at 10:30 has been the most difficult part to implement, the 2 times the day. Because American Airlines on the gap up this morning, okay, I want to go buy it. Come on, I want to get in. Come on. All right, I gotta wait. Needed to see what happens by 10:30, and there's good reasons for that. We've talked about all those reasons, so I'm not going to rehash them all. But a nice little trend trigger here with American Airlines as it sits. Average true range is about $1. So, be looking for about a $2 move here on American Airlines. But like we will have to deal with almost, any trade here over the course of the next month, earnings are coming. Right, July 26th, earnings. Well, that's less than 30 days from now. So, okay. It's going to affect our option and the option that we choose, and some of the reward potential, but it also dampens some of the risk potential there as well. So that is something we'll have to contend with, and I'll talk about it as we go out and make the trade. Bank of America. JP both very close. They both have some 3-7 crossover action on it. If it were the afternoon session, they'd probably be triggering. I suspect they'd be triggering, but with the morning parameters, they're still a little too tight to create a trigger there with JP Morgan or Bank of America. But both of them very close here, to a nice little upside trigger. All right, so let's go out and we'll go trade American Airlines. Now I'm going to go with the 16th of August options. Okay, just the regular monthly options. The spreads on the weeklies just that they're not very good. They're decent, but they're not what I want. I'd rather a little tighter spread, especially since we'll be we have to get into the trade and we have to get out of the trade. So there's a double spread that we have to deal with there with it. The Julys, they're a lot cheaper because earnings aren't priced into the July options, but it's only 22 days away. And on the challenge, it's 30 to 60 days. And so we'll continue to go with that. So right here, we're looking at the 16th of August, 32 calls. And we'll do, let's go with 14 contracts here, 15 contracts here. 15 contracts will be about $3,000 here of the challenge on this trade. Have a limit order for 198. We'll see if it fills it. And it filled it, no problem there at 198 on the 15 contracts for American Airlines. 16th of August, 32 calls. All right. So in that, as we know with morning trades, the price can get quite variable. There's not as much price stability as there is in the afternoon. But let me make sure the alert goes out here and everything's correct on it. Boom. There we go. All right, so easy peasy in here on American Airlines. American is trading at 32.15 right now. And I note that just so we can go fill out the spreadsheet here. We haven't done one of these in a little bit. So let's go here. 6:27 a.m. is when we get in here on American. And let me get the information back in front of me as I fill this out. All right, and we're in the 16th of August. Okay, 16th of August, 32 calls. $1.98 is the price on 15 contracts. The stock price here on entry was what, 15? Yeah, 32.15. All right, so 32.15 is the stock price. The average true range is $1. And then the stock exit level, right, is going to be 31.15. One average true range down. If it moves $1 against us, we'll be moving on. And profit target is $2 higher. Now, with earnings priced into the options, you look and you go, well, we have about $1,500 reward for about $500 risk. Yeah. That's kind of how it sits. This isn't an ultra aggressive trade for that first ATR move, and that's a product of the options. Basically pricing earnings into them. Had we gone with a little shorter term without earnings, that would be very different. But this is also a stock where we've seen when it's triggered, it can move 4 to 6 average true ranges without too much of an issue there. So we still have plenty of nice reward upside. Current stock price here, again, these are 20-minute delays as they are from Google. So there we go. Auto exit date be 3 days from today. So if the option is red, 3 days from now. So we have the 28th is tomorrow. We have the 1st and the 2nd. So by the 2nd a.m. So 7/2 a.m. And then the auto exit date is 2 days after that, which is July 4th. Market's closed, but it'd be 7/5 a.m. is when that would be. And so we're there. All right, we have about $3,000 here on the trade, and off and rolling. And we still have plenty of cash to put into play. If we do see JP Morgan or Bank of America signal by the end of the day, we have cash to play that. If we see another stock kind of come in and signal, we definitely have the cash to go and play with one of those here as well. All right. So pretty easy, pretty simple, and in and off and running with American Airlines. Okay. Alrighty. Bear with me 1 second. I'm just double checking that all the alerts went out correctly. I don't have the thumbs up, so I'm just kind of waiting for that. All right, cool. All right, there we are. Okay, there we are. All right. So market, off and rolling here today. We've had a few earnings. We saw Walgreens earnings here this morning. Walgreens, we saw trigger bullish the other day, and it's moving up, moving on up here after the earnings. It's one I'd love to play. I'd love to be involved with, but did not want the earnings risk with us below 10,000. And you kind of see what Walgreens look like. This is a pretty nice little breakout off of this bottoming base action here with Walgreens on some earnings that has investors kind of looking forward and going, you know what? Yeah, things are stabilizing here when it comes to Walgreens. We have seen, we've seen some chatter on some other stocks and some other, other groups of names, but nothing too major, nothing that I'd look at as game changing. Now we also had KB Home earnings. Now we talked about Lennar the other day, and my opinion on Lennar does not change. It just absolutely does not change. But KB Home, it's reacting nicely to the upside. Is there something in here maybe to suggest, hey, you know what, Lennar, fine, is KB Home a lot better than Lennar? Do we go out and buy some KB Home because of this? Well, if you come in and you look, and we just kind of look at the earnings revenue projections and kind of what happened, KB Home beat on earnings. They beat on their earnings, so nice to see for them. Year over year, though, earnings were down. Last quarter at this time it was 57 cents. This quarter, 51 cents. Okay. Revenue here beat on expectations very nicely, but year over year down. Okay, when it comes to revenue, and this is just my concern with it. Yes, investors are reacting to the beat in expectations, but when you start to look, we're still falling off on revenue. Now, KB Home has something a little bit different than Lennar. The expectations going forward actually improve. Right, so this is one of those scenarios where, I haven't gone through KB Home earnings yet, but it's one of those scenarios that sets up one of those combo trades. You long KB Home and you short Lennar, and you look to play the difference between the two. And yes, if they both go down, they're going to go down. But Lennar's going to go down more than KB Home. If they both go up, fine. KB Home's going to go up more than Lennar. Playing that differential. And, we talked about that with gold and silver the other day. We've talked about that in the past with Honeywell and Triple M. And I think that's what we see setting up here with KB Home, with Lennar, as these earnings have come into play. All right. So anyway, that's a little bit of what's happening on the earnings front. We have Boeing here today. Boeing down about $8. We saw the FAA basically come out and say they're concerned again with a few things, and Boeing pre-market reacted very sharply. In fact, let me show it to you here. Boeing reacted very sharply to the downside. You can see down here to 349. It's at 367 now, so it's $18 higher than its low here in the pre-market. Very, very sharp movement here with Boeing. It's traded up to 370 here this morning. It's just kind of dancing in a $7.50 range with it. It's one of those where I go, good. Now, I'm in some weekly calls on Boeing that I bought yesterday. I talked about Boeing yesterday, the setup on Apple and the setup on Boeing. Both are the same. Okay, both had kind of the same setup yesterday. And I went out and bought just a handful of Boeing calls, nothing too dramatic, and calls that expire this week, and I'm still in them. They'll probably go worthless unless Boeing makes a massive turnaround tomorrow or something like that, and I'm not too concerned about it. But one of the things that it brings up is this idea of, hey, Jeff, we haven't had a lot of triggers for the challenge. why don't we go out and trade some of the setups that you like out there that are on the watch list? And this has been a question that's come in not from one person, not from two people, but has been, as I mentioned this morning, one of the most common questions that we have seen come in here for the challenge, so far. And it's one of those where trading algorithm signals, waiting for an exact signal, is very different than we've run any challenge in the past. But it is how the challenges are going to be run in the future. And the bottom line is I'm not going to go and say, hey, here's a setup. Let's go with it for the challenge because we don't have anything else because everything else is a little bit quiet. You're not going to see me do it for a couple reasons. Number one is it basically now sets a period where, I got cash tied up in that, and, we have some signals. I need to go trade those. And it creates a little bit of a headache there with it. Number two is because when we looked at these setups yesterday with Boeing and with Apple, and I know Apple's up, Boeing's down, we talked about this thing called probability, right? These were good risk-reward setups, but probability wasn't all that great. I used the term coin flip. These weren't situations where the probability of working was overwhelming. They were good risk-reward scenarios. When it comes to the algorithm for the challenge, it has both good risk-reward scenarios and a high probability or a higher probability of working. And by working, I don't mean where does the stock go tomorrow? Where does it go this afternoon? I mean moving those two average true ranges. Okay, that's the key. It doesn't have a high probability of moving two average true ranges. Because when we're trading options, we need movement. If we don't have movement, our option value is going to go down even though the stock may be up a little bit on us. It's not going to do us any good. We got into Boeing right back here. Boeing popped big the next day. We took off, the 40% of it, but held the other 60%. And, the next several days, it was just kind of, it didn't do anything, right? In fact, the stock was a little bit higher and the option was a little bit lower. Right? And that'll be a consistent theme if there is no strong movement. And so it's one of those where for the challenge, the algorithm's been designed for the probability of moving two average true ranges. There's nothing in going out and looking at a technical setup. I can't just pull up a chart and go, here's IBM. All right, it has a good chance of moving this much or that much. No, I can't do it. I need some of the math. I need some of the past history. I need some of those factors to come into play to actually put the odds in the favor. So that's very important. Okay, when it comes down to it, and that'll be something that doesn't change, right? These the challenge has changed in a way that these are not. For lack of a better way to say it, these aren't my traits. These aren't things that are thunk up by Jeff, and Jeff's been sitting there looking at this, this element and says, he likes this, and Jeff says, go. That's the way challenges have been in the past. Losing challenges, successful challenges, that's the way it's been. But for the challenge to evolve, for the challenge to move forward, for it to create the consistency that it needs, we need a consistency that the algorithm brings. And I'll be the one executing the trades. I'll be the one kind of running it, making decisions when I have to. But most of the decisions, they're part of the algorithm, right? I don't have to sit there and go, well, it just moved 10 cents. What do I do? What do I do? What do I do? Right? And we've been very clear about the algorithm, the rules, the setups, and all of that is here on the on the spreadsheet here if you want to go and take a look at it and how it executes. Okay, and so that's not going to change. If we go through a period without signals for 5, 6, 7 days, It's not going to change. A lack of signals or too many signals, those are things that we have seen happen, in the past. We know those are going to happen in the future. And, I understand. I do understand this kind of mentality of some traders. There's always a trade. There's always a trade. There's always a trade. And true, there's always a trade to get in. There's always something you can get into. But for the challenge, that's not true, right? For the market, for option traders, yes, that's always true. For the challenge, that is not true. It's not been built for that. It is not. It's not designed to be a trade a minute, right? Trader minute is more about the journal aspect, the idea of understanding what's driving each trade, entry, exit, and decision, and that's the way that it will continue here. One of the other reasons that the algorithm or the challenge it's moving in this direction is because over the last 2.5 years, there have been a lot of trades for the challenge, like Boeing, like my personal trade on Boeing, where it's a great setup. It's a pretty good risk reward. I go get in, and the next day there's some sort of news I have no control over. I have no way to have predicted that. Boom, my option gets cleared out fast. Now, this has happened my entire career. I've seen it happen. But I've seen the upside and the downside balance out. But when I look at the challenge over the last 2.5, 3 years, that hasn't been the case. They haven't balanced out. Haven't had the upside parts of those. It's been all just the downsides of those, and at a rate that's incredibly different than even what the algorithm has been over the last 600 trades. I don't know why that is. I've looked at it. I've tried to understand it. I've come up with different ideas, different theories. None of them make any sense. You can kind of get into some conspiracy theories, but I don't believe in any of that. But for some reason, right? And, we saw it with GM quite a few times, right? I go get into a nice setup on GM, and boom, the stock's 3% against me the next morning. And that was happening at just an alarming rate. And had to get out of that. And that is one of the reasons of switching to the algorithm here as well. Because over the 600 trades that were used to test this and to, develop this, there were definitely some downs. There were definitely those moments of, hey, there's a trigger, and then the stock moves sharply against it because of some news. That definitely happened. But there were many more of, hey, it signals, and then the stock kind of explodes in the direction that it signaled. And so the challenge is going to have those, but, I had to change the ratio of those kind of, oh, man, good grief, what? Again, that type of bad news driving it, something you have no control over, something you have no idea that it's coming, right? And, had to get rid of that element here and put it more in the favor of, hey, you know what? Yeah, the next day there might be some news, but it's probably going to be in our favor more than against us. And so things, so the algorithm, kind of going into that changes that element here for us. Okay, so when it comes down to it, the bottom line, the results. Okay, the results of the challenge, they don't drive the execution. The execution has been tested, retested, tested again. We know the different results that can come from it. It can go to 0. It can go to 100. It can go to 40. It can have a big move up, a small move down, a big move up. It can have kind of 3 trades in a row that don't work and survive, right? We know what it can do in different scenarios, right? And we know that in the future, the market's going to give us different scenarios. But we know that if the scenarios are what they have been over the last 5 years, we know that, hey, the scenarios ultimately, the challenge is going to have us strongly in the green rather than in the red. It's a process, not an event. The challenge, it doesn't matter. One trade doesn't make or break the challenge. 2 trades don't make or break the challenge. When I got out of Boeing because the challenge dictated, right? Several questions come in. Well, what do you think? Should I hold Boeing? I want to get a little more out of it. Or, should I get out? You know what? I'm down 100 more than you were. What should I do? And my response is, look, I don't know, right? I don't know. I don't know what Boeing's going to do. But here's the thing. If you stay in and you make a little bit more, fine. Is that going to make or break your challenge? If you stay in and lose a little bit more, is it going to make or break your challenge? The answer is no. So, do what you like there with that, because one trade, if you're positioned correctly, isn't going to make or break the process. And it is about the process. It is about, kind of reacting to the signals that come in that are part of that process, and having that consistency. And, that's what it will be, for years to come. Will small things be tweaked here and there? Yeah, they will be. Okay, because, in the background, I have ongoing testing with different things, all the time. I've talked about some of the things that I'm testing. This idea of being able to enter a stock mid-trend, right? So you have something like Apple had a nice kind of reversal right here, but didn't give a bullish signal for the algorithm because of the way the parameters are, and it comes off a new lower low, right? But once we get into this scenario, is there a way to be able to take advantage of buying it for the next upward trend? Or we get into a scenario like yesterday, is there a way to buy it to get into the next upward trend? So far, I haven't found something where, consistently from stock to stock, the probabilities are strongly in our favor, and where the risk reward is strongly in our favor, because when you go and apply options, it's a totally different ballgame than applying stock. To find the stock method, that's pretty easy. To find something that's, works consistently with stock, that's fairly easy. But to apply it to the challenge format, challenge methodology, well, that's where things get pretty complicated, because you can't look at just one trade or one chart. You have to look at a huge sample size and know, okay, some of these are going to be outliers. Some of these are going to work really well. Some of these are going to be very poor, and those are going to be the outliers. But what's the normal? What's the consistency part of it? Because you don't want to trade expecting for it to work because of some outliers, because of some random event, right? It's like going out and buying puts on the market tomorrow because you expect a nuclear bomb to explode. Could that happen? Yeah, it could happen. Will it happen eventually? Probably, right? Probably. Is it going to happen tomorrow? It's going to happen next month. Is it going to happen the month after that? Probably not. And so going out and playing that, playing for that anomaly, right? When it ultimately happens, everyone's going to say, well, you should have had puts because everyone knew it was coming eventually. But going and playing for anomalies in the market just doesn't make any sense. And so in the development of the algorithm and these trade setups for the algorithm, it's about playing the probabilities and the normalities rather than the abnormalities and the outliers, and knowing, hey, the abnormalities and the outliers are going to come. Some are going to be in our favor. Some are going to be against us. But overall, they pay us nicely, and we can move forward with something consistent, easy to run, easy to follow, and something that doesn't drive a whole lot of decision making and where decision makings are stressful. Oh man, it just moved. What do I do? Oh man, there was this news. What do I do? Oh man, U.S. President Trump just tweeted. What do I do? Oh man, we're having this meeting next week. Oh, what do I do? Oh, we're gonna have this data. We're gonna have the jobs report. What do I do? What do I right? There's a million questions in the market. The algorithm's designed to take them out. And so the bottom line. Will I step in and substitute trade setups or things that I like when there's a slow time for the algorithm and the challenge and signals? Absolutely not. Absolutely not. It's not going to happen. I'll share with you trading setups as I see them. I'll talk about them bluntly, like I talked about with Apple and Boeing, how, yes, they were good setups, but not high probabilities, right? And when we see things like, some of the bigger picture stuff like gold, or we see some of the earnings like with Lennar, KB Home, I'll talk about them and, give you my thoughts on them, as we go forward. But I'm not going to sit there and go, well, you know what? I don't like Lennar. Lennar just had these earnings. It's probably going to go down. There's a stock that's way overvalued. Blah blah blah. Let me go buy puts on it today. Why? Well, number one, it's not on the algorithm watch list, and number two, it's not creating a signal. So I don't, for the challenge, I don't really care what I think, right? Which is, I just don't care what I think. When we come and we look at some of these trades, I have to admit, some of these trades that worked out really well, I was very I don't really like that setup. But when you go through it, when you go through the math of it, when you go through the setup of it, okay, it's a good probability, good risk reward. Got to go with it. I know I may not like it. It's been one where, look, I did not like the Under Armour setup very much at all. And Under Armour paid us very, very nicely, right? I really liked one of the setups out there, CSX, and, it decided not to pay us. But, my opinion on the signals, my opinion on the trades, that doesn't matter. It absolutely doesn't matter. I have the ability to step in to alter something in an unusual situation, right? Unusual circumstances, as here for, rule number 10. Jeff can step in under unusual circumstances and trade a change or change a trade. But those unusual circumstances have to be very unusual. They can't be just some normal action, normal stuff that happens from day to day, like news or analyst, those types of things. Those are normal. Those happen. If we have a nuclear bomb explode, well, that's a little abnormal, right? I'll step in and and likely change something if that is the case. So hopefully that helps out, in kind of that understanding, and look, I know that, I know that some of you like more trades and great, but, the idea here or the drive of the challenge is to create a consistent kind of over time money flow, using options and trading with a good risk reward. It's not about how many trades can we go and make, and what's the trade of the day, and what's the trade for tomorrow. It's about using something consistent to drive consistent income, and that's what Trader Minute is. That's what it will be going forward, and very much looking forward to it, and enjoying the process here so far. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you this afternoon. Take care.